Hey traders, how's it going? Welcome to our first March live trading session with me, Ambrose. Now, if you're here, it means that you're serious about, improving your trading skill, improving your trading career, and I respect that. Now, whether you're new to trading as a business or you've been grinding the charts for a long time, today's session is going to take things to the next level. Now, before I go ahead and ask you guys or talk to you guys about what we have for today's session, let's get the energy up a little bit. You can go ahead and drop in the chat your city or your country, wherever you're listening to me from, or even a fire emoji in the chat to let me know that you're here and you're ready to dive into this session. Let's go, guys. Now, while you do that, I'll just go ahead and read through this quick disclaimer. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute investment advice. Now, if you don't know who I am, my name is Ambrose Ebuka. I have 5 years of trading experience, now in the 6th year, and I've honed my trading proficiency and contrived various profitable strategies that includes swing trading, day trading, and scalp trading as well. I mostly trade and analyze gold, GJ, GU, and now Euro USD as well, with an outstanding accuracy exceeding 85%. And I also regularly backtest these strategies for efficiency and also for effectiveness. Let me go ahead and check the charts to see who we have on today's session. Hello, Simon. Hello, Mahesh, or Mahesh. I don't know if I pronounced that correctly. Let me know in the chat. But again, welcome everybody. Now, I want you guys to remember that trading is a journey. Okay, it's not a sprint. You're not trading to get rich quick. Or it's not like a get rich quick scheme. You're not doing this to make $1 million the next day. You're here to get skilled. You're here to get consistent, and you're here to get paid. The best traders in the world are not the traders that want to make all the money at once on their first day of trading, but they're the traders who show up and put in the work and keep learning. All right, so what's on today's agenda? We're going to check the economic calendar. I'm going to show you guys how to trade smart using the economic calendar. Obviously, so you guys would not be surprised, or you guys will not get, caught off guard with market volatility because of the news. We'll also correlate this calendar with the charts. I'll introduce you guys to zone trading, which is a strategy that I use. We'll do some live market analysis, break down some key pairs. And I'll give you guys some examples with the strategy as well. I would have a question and answer session. Now, this is a question and answer session for you. Where you get to ask me questions, but I would also ask you guys some questions. So it's important that you pay attention to the end. And I've also got something special for those of you who stick around till the end. It's an exclusive promo code just for you. It'll give you 100% bonus on your deposit. All right. So before we dive into this session, guys, I'm seeing the new people joining. Bakare from Abiyakuta, Jitendra Jain, welcome. Before we dive into today's session, you guys should tell me in the chat, what's one thing that you want to improve in your trading this month? I mean, the month just started. We're in the 6th day of the month. What's one thing that you want to improve in your trading this month? It could be risk management, discipline, perfecting your entries. Let me know in the chat, guys. What's one thing that you want to improve in your trading this month? Now, while you answer that, this session is going to last for about 45 minutes, and I'll be checking the YouTube live chat periodically to answer any questions that you guys have. So if you have any questions, you can always go ahead to ask your questions in the YouTube live chat. If you're joining this session from the Octa Nigeria Telegram chat, you'd have to switch over to YouTube to be able to ask the questions in the live chat so I can see them. All right. All right. Let's see. What's one thing you want to improve in your trading this month? Now, guys, I have to also remind you that in as much as I'm teaching you about the strategies and showing you, how this market works, this is going to also be a very interactive session. All right, so I'm going to ask you questions. We're going to have a discussion while you're learning. Okay, Fundi says perfecting my entries. Bakari says risk management and discipline, perfecting entries. That's beautiful. That's beautiful. It's also beautiful that you guys have goals and things that you want to improve on as the month starts. And the reason that's good is because the earlier you get those mistakes out of the way, the earlier you learn these core values of trading, the faster your success in trading will be. Now, I'll ask you guys a question. If you found out, and this is an example, right? If you found out that you only had 30 failures before you become successful in trading, how fast would you want to fail? Right? Now, this is why it's important that at the end of the day, when you figure out these problems or figure out these things that, are trying to hold you back from becoming a successful trader, you chase them on and you overcome them as soon as possible. All right. So whatever your goal is, whatever you want to improve in your trading this month, by the end of this session, I strongly believe that you would learn some of the skills and some of the tips and insights that you can use to improve on those things, which are also going to be based on my experience, which are also going to be things that I have done, things that I've put into practice and things that have worked for me. Those are the kind of things I will be teaching you. So stay till the session ends and hopefully you get all the answers you need to become successful. Perfect entries, how to avoid trading false reversals. Guys, we're going to go through the analysis, the process, and you guys are going to see everything and learn exactly how I analyze this market. All right. So we're going to first go to the economic calendar. Let's see. All right. Let me tell you guys something. Trading is not about just having, the perfect strategy. It's not about, if it's about having the perfect strategy, everybody would be a millionaire, right? Trading is about understanding how the economic events work. Okay, trading is about understanding how you're able to come into the market and look at different markets, different countries, different economies, how this one affects this other one, and how you can go to the chart and either from the strength and weakness of these different currencies, you can buy or sell. Now, if everybody, like I said, if everybody would have a strategy and trading was about having a perfect strategy, then everybody's going to be a millionaire, right? So you have to understand exactly how to combine technicals and fundamentals. If you don't know what's going on in the world economically, you're going to be trading in you're going to be a blindfolded trader, kind of. So you want to understand exactly how to use the economic calendar. And one of the ways you can do that would be to go to the analysis and education, and then you come down to economic calendar. You want to click that. And then you'll be introduced to the Octa economic calendar. Now, I'm going to ask you guys this question for those of you that are new and for those of you that have been trading for a while as well. How many times have you gone through the economic calendar? Let me know in the chat. How many times have you gone through the economic calendar before you executed a trade? How many times have you gone through the economic calendar before executing a trade? Let me know in the chat. How many times do you go through the economic calendar? Do you even go through the economic calendar? Let me know in the chat. Now, the economic calendar is actually something that separates the amateur traders from professional traders, right? Because the economic calendar would help you avoid bad trades. If you're executing a trade and a major news comes up, it could wreck your technical setups. Everything, all your buys, your sales, everything could be wrecked by just an economic event. Let's say, for example, right, you're trading at 2:45. Now, this is in West African time. Let's say, for example, you're trading at 2:45 and the press conference or the speech is being released, and this is something that brings about or potentially bring about volatility to the market, and you don't know about this event, you're just swimming in profits. This event comes out and it turns the market around. Now, because you were not aware, this could potentially take you off the markets. Having that awareness that these are the events that are going to be happening today, this is how I'm going to react when the market gets to this time, this is what I need to do, can save you a lot of money from this market. So when you understand how the economic calendar works, you're able to trade with confidence. No more surprises, no more, having the markets catching you off guard. Look at your economic calendar as a schedule of important news for financial markets. Just like how, people that love to watch football, they check to see the fixtures to know when their favorite teams are playing. Traders also look at the economic calendar to know when big financial news will be released. Okay, I'm saying in the chat that some people say they check every day. Michael says every day. Channel says I start there and then I check the charts. It's part of my plan for direction. Fundi says not even once. Glow says I barely check. Well, when I'm done explaining how the economic calendar works, hopefully, guys, you you would be able to check periodically. Okay, in terms of understanding, I'm sure and I believe that you'd have a good understanding about how the calendar works by the time I'm done explaining. But hopefully, you're able to wake up every day and then before you execute a trade, you go to the economic calendar and you check to know what's going on for that day, and even for the week and for the month as well. All right, so today we've had a couple of reports, and this is just for high impact. So if you want to take advantage of this calendar as a beginner trader, you want to go to medium and low, tick all that, come down to apply filter, and then it's going to add all of that for you. Right? You can uncheck this, come down here. Well, I normally use high impact events because I'm only focused on high impact events. I already understand what these ones are, what they mean, but just like the name goes, it brings about medium and low impact volatility to the market. So I only want to focus on high impact news because, again, like the name goes, it brings about high impact volatility to the market. Now, the first one that we have here, okay. Let's click on apply filters. All right, so the first one that we have is the Australian trade balance month over month. Now, one of the fastest ways to understand how these events work in the economic calendar is to click here, right? And then you can see the actual, the forecast, the previous, but not only that, you can also see the definition, the entire definition of the reports. So Octa goes ahead to explain and give you a definition that the Australian trade balance is released by this, is the difference in value of import, export. You understand that, and then you want to pay attention to this last sentence. If a steady demand in exchange for Australian exports is seen, that will turn into a positive growth in the trade balance, and that should be positive for the AUD. Now I'm going to go ahead and explain exactly what this means because we had an actual of 5.6 billion compared to the previous of 5 billion. So when I'm done explaining, I'll ask you guys what you guys think about this result. If it's bullish, if it's bearish, if you buy or sell. So pay attention. All right. Now, like I said, the first report we have is the Australian trade balance, and the Australian trade balance tells us whether Australia is exporting more than it imports. Right? So think of it like your bank account. If you're making more money than you're spending, then obviously your balance is positive, right? If you're making more money than you're spending, you have a positive balance. But if you're spending more than you're earning, then your balance is negative. So the numbers are saying the previous was at 5 billion, well, let's just say 5085. The forecast 5.5, and the forecast is what, Octa, the economists as well, analysts have forecasted the report to be. And then the actual came out at 5.6. Now, what you're looking at is the actual against the previous. In cases where you have to look at the forecast would be in a case where positive news doesn't bring positive impacts to the currency. But I'll explain all that later. But what you're looking at is the actual versus the previous. So what does this mean? It literally means that the actual trade balance is higher than expected. The expected was 5.5, we're having 5.6, and this is great for the Australian economy. When the economy is strong, the currency, which in this case would be the Australian dollar, tends to get stronger. So if you're trading, let's say AUD USD, and this report came out, which it did in the morning around 1:30 a.m., you might see the Australian dollar rise against the US dollar, and this means AUD USD would go up. So if you had any buy trade on AUD USD, you'll be making money right now. Now, here comes the question. Based on this report, 5.6 as compared to 5.085, would you consider buying or selling AUD USD? Let me know in the chat. Based on this trade balance report, would you consider buying or selling AUD USD? Let me know in the chat. Would you consider buying or selling AUD USD? Let me know in the chat. Based on this report, we have previous report for 5085. You have the actual for 5620, which is 5.6 billion. So let me know in the chat, guys. Would you consider buying or selling AUD USD? Mama Bolo says buying. Guys, apologies if I don't pronounce him correctly. But if I did, I mean, you have to let me know. Bakari says buying. Endurance says selling AUD USD. Okay, I need more answers, guys. Jeremy says sell. Sencrack says buy. All right, guys, here's what's going to happen. Based on this report, right, you can, well, I don't want to tell you guys the answer now. I just need one of you, anybody that says buy or sell, to go ahead and explain to me why they will be buying and why they will be selling. Based on this report, right, I'm not saying technical, or based on the report you're getting right now, would you be buying or selling? If you're buying, why? If you're selling, why? Let me do in the chat. Now, buying AUD USD makes sense because the report showed a higher than expected trade surplus. What this does is it strengthens the Australian economy because of the increase in value of the Australian dollar. This report came out good for the Australian economy. A good economy would in turn influence the currency, and the currency becomes a good currency. Now, another confirmation that you can get based on this report would be if a steady in demand in exchange for Australian exports is seen, which is this, it increased, it would turn into a positive growth in the trade balance, which is this positive growth. As you can see, it's increased more than the previous, and that should be positive for the Australian dollar. So if you said you're going to sell, please let me know why you're selling, and then we can, talk further on that. And then the next economic event we have here is the Eurozone retail sales year over year. So MOM means month over month, YOY means year over year. And again, you want to read all this to understand what it means and how it can impact the euro. But the retail sales tells us, or the retail sales report tells us how much people are spending in stores. More spending equals to a stronger economy. Less spending equals to a weaker economy. Now, the numbers are saying 1.5 as compared to the previous 1.9. How do you understand what this means? You come down here. A high reading is seen as bullish while a low reading is seen as bearish. Did we get a high reading or a low reading on Euro reports? Let me know in the chat. The retail sales report on the Eurozone year over year, was it a high reading or a low reading? Let me know in the chat, guys. Let me know in the chat, guys. Is it a high reading or a low reading? Retail sales year over year. Now, if you're trading pairs like Euro USD and you saw this news, you might expect the Euro to fall against the US dollar. You can go ahead and place a sell trade, but I'll explain to you guys because currently the Euro is not even falling against the US dollar. And I'll go ahead and explain to you guys why that is, okay? Why that is, yeah. I'm seeing everybody saying low, low, low. If you said low, it's correct. Obviously, we are having a low reading as compared to the previous 1.9. So this is expected to be bad or negative for the euro, right? As you can see here. But we also have other reports as well, which is, the rate decisions for main refinancing operations rate and also rates on deposit facility. And rate decisions is a big one. Okay. This comes directly from the European Central Bank. Now, here's what they decided. 2.65 for main refinancing rate, which was previously 2.9, and 2.5%, which was previously 2.75%. Again, you can always click to know if this is good or bad for the economy. But what happened here is they cut the interest rates, and when the central bank cuts interest rates, it means that borrowing becomes cheaper. Now, it might sound like a good thing, but for a currency, it's usually a bad news because lower interest makes the currency less attractive for investors. I'll give you guys an example. Imagine you have two banks, right? Bank A and Bank E and Bank B, right? Bank A is offering 5% interest rate on your savings. Bank B is offering only 2%. Which bank would you put your money? Bank A or Bank B? Bank A is offering 5% interest rates in your savings or on your savings. Bank B is offering 2% interest rate on your savings. Which bank would you put your money in? Or someone's asking, where can I get this calendar? You can get it from Octa, the Octa official website, octaafrica.net, and then you come down to analysis and education, and then you want to come down to economic calendar, which is right here. All right, so everybody's saying Bank A, the 5% one, right? That's exactly how investors think in Forex. If a central bank raises interest rates instead of cutting them, what do you think will happen to the currency? If they increase the interest rates, it would strengthen the currency because higher interest rates would attract more investors looking for better returns. And what this does is it increases the demand for the currency, making it stronger. How many of us are understanding? Let me know in the chat if you're understanding. If you're understanding, let me know in the chat. And then we also have the ECB press conference and the European Central Bank President Lagarde's speech. Now, all these events has already passed. So if you want to take advantage, for the person asking where they can get the calendar, please make sure that your time zone is set to your location time zone so that you don't miss out on these events. All right. Let me know if you guys are understanding. All right. I understand. Perfect. Now, the value of the euro depends on interest rates, depends on, investors' confidence, depends on the economy. When the interest rates are low, it results in a weaker euro. So if the European rates or the European interest rates are lower, investors may take out their money, out of Europe and put it somewhere else with higher interest rates like the US or another country, making the euro weaker, or even a safe haven commodity like gold. Uncertainty can also be a reason why the euro will be weak as well. If a lot of people are unsure about the economy because of trade tensions, maybe military spending, whatever, they might avoid investing in Europe. We can already see what's going on with the United States dollar. These things can also weaken the euro. Now, to answer the question of, currently, if you look at the euro chart, euro USD chart, you'd see that despite a bearish news, the euro was still going upwards. Now, normally, when a central bank like the European Central Bank cuts interest rates, the currency should weaken because lower interest rates makes it less attractive to investors, right? But today, despite the news, we're saying that despite all the rate cuts, Euro USD still went up. Now, why is that? Guys, if you look at the dollar index, which is the DXY, you'd see that the dollar index was already falling. We've been analyzing the dollar index for the longest. We'll come to this, but first, you have to notice that the dollar index was already falling, and these currencies trade in pairs, meaning if one currency falls, the other one automatically rises. In this case, Euro USD, Euro versus dollar went up because the dollar was already weak. Now, even the euro, or even if the euro was not very strong, the fact that the dollar had this massive fall also helped push the euro higher. How many of us know what a seesaw is? If one side goes down, the other side naturally goes up. Another reason would be that the market itself, it doesn't just react to the news, it reacts to volume surprises. Traders already knew that ECB would cut interest rates to 2.5. Now, that's why a lot of times you guys see NFP CPI have a huge spike, or most of these FOMC reports or speeches from the Federal Reserve have a huge spike because the markets react to surprises. But in this case, if you look at the reports here, you'd see the forecast was pretty much 2.5 to 2.65 on the interest rates. So it was already, let's go back to it was already priced, meaning traders had already, expected, or investors had expected for this to happen. And since there was no shock, there was no need to rush and sell the euro. I'll give you guys an example. Imagine that you hear a rumor that, Apple will release a new iPhone. By the time they announce it, the excitement is gone because you already expected it, or maybe they announced, or imagine that you heard a rumor about the price of the new iPhone, or the features of the new iPhone, or the shape, the design, everything. Which obviously usually happens sometimes. When the phone finally comes out, we already know most things about the phone, so the excitement is gone because most people already expected it. Let me know if you guys are understanding. Let me know if you guys are following. I'm going to ask you guys some questions, one question to check your knowledge, and then we can go to the technical analysis. So if the European Central Bank increases the interest rates instead of cutting them, what would happen to the euro? Would it increase in value or reduce in value? If the European Central Bank increases the interest rates instead of cutting them, what would happen to the euro? Would it increase in value or reduce in value? Let me know in the chat. Or would it stay the same? If it will stay the same, you can still let me know in the chat. Okay, I'm following. Perfect. Beverly says it would increase. Jeremy says it would reduce. Abu says reduce. Michael says increase. Increase. I'm going to repeat the question again. If the European Central Bank increases the interest rates instead of cutting them, what will most likely happen to the euro? Would it increase or decrease? Now, the correct answer is it would increase. Remember, when the interest rates are increased, it attracts investors. You guys were the ones that said you would invest in Bank A with 5% returns rather than going to Bank B with 2%. So how is it going to be decreasing in value? So the correct answer is increase. Now we're already looking at the charts. So we're going to talk about something that, I would say separates the average traders from the elite traders in terms of technical analysis, which is trading in the zone, guys. If you are trading the market, especially as a beginner trader, you need to understand the zones, so areas of supply and demand, areas of support and resistance. How many of us knows what that is? Supply and demand, support and resistance. If you've heard that before, let me know in the chat. The main objective is not to make profit in every trade. It's to trade well, execute well. When you execute your trades well, profits follow naturally. But if you just chase the profits without looking at your execution or your strategy, you could miss out on the profits. So if you've exited a trade early, you cut your trades short, or you've let emotions take over your trading, you overtrade, this is what you need to focus on. So zone trading itself, which is what I use, is kind of a price action based strategy. And what it does is it's focused on supply and demand levels, support and resistance levels, instead of just trading at random levels like in the middle of these areas. If you look at this chart, if I go back, you'll see that most of these lines that we have, we can trace all the way back to more than a year ago. This is 2023, right? Even 2 years ago. But after 2 years, you can see the market still come back to retest all these levels. Guys, we've been analyzing these markets for a very long time, right? Even more than 2 years. And we're seeing how the dollar index still respects these key levels, even after 2 years, guys. If you have a question, you can always ask a question in the chat, okay? You can always ask your questions in the chat. You have not heard it before. Okay, you've heard it before, but you're still not clear on making them accurately. Well, after this session, you'll be able to spot and identify areas of supply and demand and also areas of support and resistance accurately. All right. So the idea of zone trading is instead of rushing to enter your trades at random levels, you just wait for the market to reach a high probability zone, right? Traders can call it a lot of names: point of interest, area of interest, these, that. It is just a zone with high probability, a zone where the market has made impacts previously, once, twice. The more retests the market makes on that zone, the stronger the zone becomes. What I mean by that is, if the market eventually breaks below that zone, there is a high likelihood of continuous downtrend. So instead of chasing price like a rookie, you just let the market come to you. It's all about trading smart. So what are the key concepts of, I'm just going to go ahead and write that down. The key concepts of zone trading. Let's change this to black. So the first one would be market structure, right? Understanding, being able to come into the market and perceive the market, understanding what's going on in the market. I'll give you guys an example. Now, if you look at the dollar index, we're seeing two things. We're seeing the market move from an uptrend, create a double top pattern, and reverse to the downside. Simple. Before anything else, before supply and demand, support and resistance, liquidity this, liquidity that, you're able to come into the market and identify the structure or the condition of the market. And what are we seeing here? Before any of these lines, if I take all these lines off, okay, let me give you guys an example. Let's take all these lines off, right? Without the lines, without any analysis, you're able to come to this market and say, this is what I'm seeing. The market is going up, created a reversal pattern, and now going down. First, and then you can start to go ahead and identify key levels in this market. Which is the second thing, which is to identify key levels. Let's take this away from here. Let's bring it all the way up to this point. All right, identify key levels, and the key levels now would be your areas of supply and demand, support and resistance. If you don't know what support and resistance is, support level is a level where the market fails to break below. And if it eventually breaks below that level becomes an area of former support and current resistance. I'll give you an example, right? If you look at this yellow line, you see that this yellow line served as support for the dollar index. 1, 2, 3. Finally broke below the support and came back to make a retest at the newly formed resistance. When support is broken below, it becomes new resistance. The same thing for this zone as well. Was resistance here, broke above it, came down to find support a couple of times, broke below it, came back up to find resistance a couple of times as well. So instead of just drawing one line, look at resistance and support as zones. I only like to use one line when it's a minor level like this one, so you can see, but the major ones, I like to use a zone. Now, what do you want to do when the market has given you indication for key levels, areas of supply and demand? You want to identify your entry points. So we'll call that determine entry and exit. right? That's what you want to do. Now, one of the ways you can determine your entry and exit with a zone trading strategy is either to trade the break or to trade the bounce. I'll give you an example. Let's go to, should we do GBP USD? Okay, let's do GBP USD, right? Now, your key levels can be areas of supply and demand. They can also be trend lines as well, as you can see here. So you can either trade the break in terms of markets creating a key level here, break and retest. This is your confirmation. When you have a break and retest and there's no follow-up from that retest, you start to expect bullish momentum, right? But this is on the 4-hour time frame, so the confirmation should come from the lower time frames. You can use the 4-hour time frame, the daily time frame to identify, you know, momentum, strength, trend. For confirmation of trades, except you're a swing trader that likes to hold trade for a long period of time, then you can trade on the 1 hour, 4 hour. But if you're a day trader or a scalper, after getting your confirmation on the higher time frame, let's say for example, I had this trend line here. I saw multiple bounces on this level. We had it here, 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 reaction here. So the markets come down here. And let's say I want to trade this market somewhere around here. This would give me two alignments. The first alignment would be the trend line. The second alignment would be the market reacting to this minor key level and this major trend line. The stronger you get a bounce on a trend line, or the more often you get a bounce on a trend line, the stronger that trend line becomes. And that's why you're seeing massive pushes like this. But in this case, we had the trend line bounce and also we had the alignment with our minor level. Now, if I zoom in closely, you see rejection. You see the market gave us a rejection candlestick. One of the ways you can identify entries is by looking at the momentum in candlesticks. So what I'm trying to say is, without using any indicator, any trend line, you should be able to read and understand these candlesticks. What do I mean by that? If you look at this momentum candlesticks, you see that the bearish candlesticks are not giving huge momentum as compared to this candlestick. You can see bullish, right? If we had something like this bearish candlestick here form around this point, then that could be an indication to say, hold on, we're at a key level, we have huge bearish momentum, let's see how the market plays out. But we didn't get that. What we got was low momentum building up to this key level, indecision candlestick, which is the doji candlestick, another indecision candlestick as well. And if you're familiar with the doji candlesticks, you will know that the doji candlestick gives you indecision, tells you this market is either coming to an end or momentum is slowing down. And what happened? We had the break above the doji candlestick and also the pushback into and above the trend line. Usually, if I was going to execute a trade here, I would actually wait for the market to break above this previous swing high, which is the one that was formed here, and make a pullback. So I wouldn't be entering the trade around this point. I'll be waiting for the market to push back here before I execute a buy trade. And again, guys, if you're going to execute trades as a day trader, you have to go to the lower time frames, like the 15-minute time frames. You can get your understanding of the direction and momentum, strength, trend, everything from the higher time frame. But for execution, go to the 15-minute time frame or the 5-minute time frame, which is what I like to use. Now, it can seem very nice to explain, but I would love for you guys to actually put all this into practice. Okay? When explaining, you get to understand, everything flows well, but you only learn this skill when you practice. You only learn this skill when you practice how to trade yourself. So whatever it is you've learned today, I'm urging you guys to put these things into practice. And while you're practicing, don't chase price. If you're trading the zone, wait for the market to come into your zone and execute with confidence. The time frame is this is the 15 minutes time frame. So I said, if you're a day trader, you can do analysis on daily time frame, 4-hour time frame, As you can see, I've also been analyzing this market for the longest as well. Daily time frame, 4-hour time frame, you can conduct your analysis. For execution, you want to go to the lower time frames like the 5 minutes or the 15 minutes time frame and execute your trades. But first, you must have your understanding of the trend from the higher time frames. Don't blindly go to the lower time frames to start executing trades. Let me know if you guys have any questions in the chat. Let me know if you guys have any questions in the chat. I'll give you guys my bias on the dollar index, and if you trade GBP USD or Euro USD, you can use that bias to trade that as well. Obviously, we're already seeing how the market has been reacting to these minor levels. Again, I always tell you guys, I like to use lines for the minor levels and use the rectangle for the major levels, which obviously you can see how the market reacts to the major levels. Also reacts to the minor levels as well, but not much of a reaction, right? Now, a market like this, I always tell you guys, the market likes to move in the magnets. Why? Because every action you're seeing here is based off human reaction, and humans like to repeat themselves. So as this market was going up, on the way down, it's still going to respect all these levels that it has respected. And obviously, as we've had this break here, we're going to see this market potentially come down to make a retest at this point. So currently, if you're trading any pair that has the dollar in it, mostly major pairs as well, the dollar is still pretty weak right now. We're already seeing the massive momentum pushing the dollar to the downside. If I go to the higher time frames, like the monthly time frame, the month just started, guys, but we'll clearly see that the month, let's zoom in, clearly see that the month that just started, this is March, started pretty bullish, pretty bearish rather. Let me zoom in and show you guys. The month just started, but it started pretty bearish. Now, when you see a month that starts like this, you don't want to start buying. You want to look at the candlestick and say, for example, all these ones that were bullish, right? The beginning of the month, usually you can see, this was in October 2024, you can see it started bullish and that momentum lingered for a long time. So we're seeing a market that has started bearish with high bearish momentum. We're already seeing this is the lowest point that it was in November, which has created this low here. And which is also the area where I'm telling you guys that this dollar market is going to come retest. As you can see, this level, this key level that serves as support connects to that of November, the lowest point that the dollar index was in November. Now we've broken below this swing low, the lowest point in February, the lowest point in January, lowest point in December. Now we're coming for a retest at the lowest point in November. Absolutely no reason to be buying the dollar at this point. So if you're trading GBP USD, Euro USD, you want to be looking for more buy opportunities to buy those pairs and sell the dollar. Guys, if you have any questions, please go ahead and ask me your questions. This is the Q&A session. I'm going to go ahead and answer all your questions in the chat. Go ahead and ask me your questions in the live chat, guys. Let's go. How big of an impact will the NFP have on the USD pair? Usually it brings, I mean, NFP is about the US. It tells you the amount of unemployed people in the United States. So obviously, it usually has huge impact to the US dollar. Sometimes it doesn't, but most of the times it has huge impact. Most times when the actual report is maybe the same with the forecast or, slightly more than the forecast, when the difference is not much from the forecast or from the previous, rather, it doesn't really bring about volatility. Sometimes you even get the volatility or the move before the news is being released. Euro USD gap from Monday. Actually, that would be Sunday, because usually what happens is the market opens on Sunday night, right? From Friday to Sunday, the currency market is closed. You can always trade digital currencies on the Octa trading app during the weekend, but the currency markets will be closed, and this will create a gap. All right. Because there's no trading activity, so there'll be that gap. Let's see. Any other questions, guys? Support and resistance. So one of the things I'll say about support and resistance, I've seen somebody asking if it's the same with supply and demand. Support and resistance can be, you can identify support with a line, but supply and demand is usually a zone. So a demand zone is an area where buyers have previously stepped in aggressively. It's called a bullish zone. It's the demand zone. A supply zone is an area where sellers have overwhelmed buyers, which is a bearish zone. Someone's saying it's not clear. What's not clear? Can you tell me what's not clear? It's very easy to see and decide from the previous candles, but when you're about to execute a trade, when you are trading, it always goes the opposite. It depends on your approach, right? Are you deciding from the previous candle in the 15 minutes? Okay, fine. What's the 4 hour saying? What's the daily time frame saying? What's the monthly time frame saying? I only use, I mean, I know you're saying this because of the monthly, previous analysis when I told you the previous candlestick was bear. I only do that on the monthly time frame where I look at the month, the entire month, and say this month in its entirety was bullish. When I go to the 5 minute time frame, I don't look at the previous candle. The previous candle tells me nothing. When I go to the 5 minute time frame or the lower time frames to execute trade, I look at the current candle. What is it doing? And then I wait for the close and I trade. But it has to be in alignment with my understanding from the higher time frames. Well, guys, the session is actually, we are at the end of the session, so I'll not be able to analyze Euro USD right now. The session usually lasts for an hour, so I won't be able to do much on the Euro USD, but let's see if you can say something in 1 minute. Currently on the monthly time frame, you're saying that Euro USD is bullish, and I always tell you guys, when you see the market start bullish, obviously we've taken out this previous swing high. We are approaching this one, which I believe Euro USD is going to test before the end of this month. All these lines you see here were drawn from previous months, guys, and in this previous months, we've seen the market test. I'm expecting Euro USD to do the same this month, but if we go to the 4 hour time frame, let's see. What are we seeing? Can we trace this rejection back to anywhere? Yes, we can. Yes, we can. You see, I always tell you guys, the market likes to move like a magnet because of traders' action. Movements like to repeat themselves. On the way up, we're obviously going to, let me extend this first. We'll extend this one, and then we'll extend this other one as well. Let's use the horizontal line. Let's change this to red for the purpose of this session so you guys can see what line I'm talking about. So we're currently here, and as we've looked back, you've seen that this reaction comes as a result of this level being an area of previous support and also previous resistance in some cases. As you can see here, support, resistance here. support. And even if we continue to go back, we'll see that this level was actually an important level for the euro dollar, which is why we're seeing this rejection. Now, currently, if you look at the euro dollar market, you see that market has already made its impulsive move. Usually when the market moves in this manner, you get to see a retest. So these are the areas, I mean, Euro USD is still pretty bullish, but these are the areas I want you guys to look out for in terms of capitalizing on the bullish momentum. So I'm going to put this as green here, and also this zone as well. This is where I want you guys to pay attention to. So if you're looking to buy, this place currently is not an ideal place to buy. Remember, the idea is not to buy high, you're buying low. So the market has made its move. If you missed out on that, wait for the next one. But these are the areas that we could see potential rejections in the euro dollar markets. That's what I'm looking at. Okay. And that's what I also want you guys to look at. Remember, after every impulsive move, there's a retracement, there's a consolidation. It may be a pullback to any of these zones, but you'll be more comfortable buying at a low, buying at a swing low, than buying at a high. So these are some of the zones I want you guys to pay attention to in the coming days for the Euro USD. But currently, we're still pretty bullish on Euro USD. Let me know if you guys understand the analysis. For those of you that asked for Euro USD, let me know if you understand now. All right, guys, if you're ready to get started, if you're ready to start your trading journey and take it to the next level, go ahead and download the Octa trading app. You can get the link in the description. Octa offers a wide range of trading instruments with low spreads, fast execution, and zero commissions. It also has various educational resources, 24/7 customer support, and a strong commitment to funds and data security. If you made it to this point, congratulations. Now you get to see the promo code Ambrose E100. You can take advantage of this promo code in 5 steps. Open the Octa trading app. Go to the Octa official website if you don't have the app, but you should have the app because you're going to be trading from the app. Beautiful interface, user-friendly. Get the app with the link in the description. If you're about to make a deposit, use Ambrose E100 in the promo code section of the menu and activate your bonus. You can make a deposit and enjoy your 100% bonus. Guys, to be able to withdraw this bonus to your trading account or to your bank account, if you like, there's a certain level that you'll be required to trade, a certain volume that you'll be required to trade. So you'd see that when you're making a deposit, and once you fulfill the requirements, your bonus gets into your trading account, and you can withdraw that to your bank account if you like, or you can use it to trade more and make more profit, whichever one you like. Just take advantage of this bonus with the promo code Ambrose E100. Let's do a quick summary. We talked about the ZAP zone trading strategy that I use, its components, stability for you as a trader, and we used it on a live chart. We talked about news trading. We analyzed the market with the live trading strategy during this session. And one of the key takeaways I want you guys to understand from today's session is to analyze the trading instruments, understand how they behave under different conditions, review your actions and reflect your decisions to identify what works well and what can be improved on. Okay, you can only grow and succeed if you're able to take accountability. Keep up with the latest market news and updates with the Octa trading app. You can get information from there, and also the Octa economic calendar, and use educational resources like this channel, the Octa Broker YouTube channel, and these videos, live sessions, webinars to enhance your understanding of trading strategies and tools. The price of the app, the price is free. There's no price of the Octa trading app. It's a free app. All right. You can practice with the demo account, and when you get confident, you fund your account live, trade, and make real money. Okay. Guys, we value your feedback, so take a moment. It's going to take about 1 minute to fill out the survey. You can scan the not the promo code, the QR code rather. Guys, I'm maybe too excited of giving you guys my promo code, so make sure you use it. The QR code, you can scan that to give us your feedback and fill out the survey. It's going to take 1 minute, or you can use the link in the description as well to fill out the survey. And right about now, we've come to the end of this session. I want to leave you guys with something important, guys. Trading is not about just charts and numbers. It's about mindset. Okay, it's about your ability to stay focused, to adapt, and to also keep your emotions in check. These are the things that will determine your success in trading more than any strategy. Okay, so as you step into this market, remember this: master your mindset, and the market is going to follow. So stay patient, stay sharp, and keep growing, because success is built one good trade at a time. I'll see you guys in the next one. Bye.